Hello students, in this lecture we are going to cover banker-customer relationship. So first of all, who is a bank customer? Bank has been defined under Section 5 Banking Regulation Act, but bank customer has not been defined in any act. So there is no definition of bank customer in any act, whereas bank has been defined under Section 5 Banking Regulation Act. For KYC purpose, Reserve Bank of India states that customer includes the following persons. So who is customer as per KYC guidelines and for KYC purpose? First, any person or entity, that is organization, which maintains business relationship with the bank. So a person or organization called entity which has account with the bank, that means which maintains business relationship with the bank. Secondly, on whose behalf that account is maintained. So first, the person or entity in whose name that account is. Second, on whose behalf this account is maintained. So they are customers. Similarly, beneficiaries of transactions by professionals, they are also customers. Beneficiary of transactions by professionals. Any person or organization who is connected with a financial transaction which can pose a significant reputational or other risk, say high risk, high value wire transfer, demand drafts. So those transactions are also covered under this for KYC purpose. So mainly the person who is maintaining account and person on whose behalf account is maintained or beneficiary of the transaction by professional, so they are the customer. And under KYC, those transactions are also covered, financial transactions are also covered, which can pose significant risk to the bank. So say demand drafts, wire transfer of high value. When account is opened, in what form the first deposit must take place to have all protections. So first deposit. So first deposit can be cash, first deposit can be check, or it could be no balance account or zero balance account. So earlier we used to call these accounts as no frill accounts, but now we call them basic saving deposit bank accounts. So basic saving bank deposit accounts. So first deposit can be in the form of cash or check, or it could be zero balance account called basic saving bank deposit account. As regards first deposit in cash, it is only a practice. Now, what are the rights of the bank? So far customer is concerned. Rights of the bank. So there are three kinds of rights. One is called a right of lien. Second one is a right of set off. And third one is called a right of appropriation. These three rights we are going to discuss in a separate lecture. Now, obligations of the bank. So here obligations we are going to discuss. So first major obligation is to make payment of checks issued by customer. and this obligation is due to Section 31 Negotiable Instrument Act. So customer will issue checks and bank will pay those checks provided certain conditions are satisfied. So this is obligation of the bank under Section 31 Negotiable Instrument Act.